Stocks closed mixed on Wednesday as we saw the S&P 500 and the Nasdaq Composite effectively closed flat. We saw the Russell 2000 down a little bit more, but on a positive side of the equation, we did see the Dow Jones Industrial Average advance about 1/3%, and that was good enough for an all-time closing high. We didn't have a lot in the way of news today, although we did hear from Jerome Powell saying that he does not expect any more interest rate cuts anytime soon. We did have a snapback rally in some of those oversold risk-off trades that I mentioned in last night's video. A lot of the REITs and utilities bounced back here today, so we'll talk about that. Then we'll get into our trade application example, which will feature a trade on a commodity going into the end of the year. So let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 13th, 2019. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe while you're there, check out our description area, and sign up for our email distribution list, which will entitle you to receiving all of the stocks in the S&P 500, giving you overbought and oversold cluster signals for that particular day. I might add that last night's list was quite profitable if you looked at all those oversold cluster signals within the utilities and the REIT space. In addition to that, we're heavy users of Twitter. Feel free to follow me. My handle is @BrandonVanZee. We also have a presence on Facebook. Join our group by going to the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. And as I mentioned in the intro, we do have basically a flat close here for the Nasdaq and the S&P 500. Just to make it official, S&P 500 was up 0.07% and the Nasdaq was down 0.05%. But as I also mentioned in the intro, the big story here, I guess if you want to look at the bullish side of the equation, was the Dow Jones had a pretty impressive candle here today. We were up 0.33%, and that was a nice bullish engulfing candle, leading us to not only a new intraday all-time high, but a new closing all-time high as well. On the downside of the day, we did have the small cap Russell 2000 universe. It was down 0.37% today. Again, note that we've been pretty strong with the Russell 2000 recently, so even with that pullback, we still retain that bullish posture. In fact, that's the case with all of our charts at this point, is we continue to have those bullish postures in all four cases, in fact, strongly bullish postures. So we'll see that where that takes us. Right now, it kind of feels like we're taking a little bit of a breather here in the markets for the most part over the last week or so, where we haven't been going up at quite the same rate as we had in the weeks prior to that. But, you know, as I mentioned yesterday, we're a little bit long in the tooth from a near-term perspective here, as this is about the 24th or 25th day now of our bullish near-term run. And so at some point, we'll have to let the bears take the ball for a little bit. But as we've been mentioning, expectations right now is that we'll continue to look for bullish opportunities going into the end of the year. From a seasonality perspective, these are usually strong months during the market. As you can go over now to our next chart and take a look at our three green arrows, you can see that pretty much the same story as yesterday, with one slight adjustment or edit or update. You can see the S&P 500 did put in a red arrow on the MACD. Remember, yesterday I mentioned how we had the red arrow on the MACD on the Russell 2000, and the other three charts were still three green arrows. Today, the S&P 500 joins the Russell 2000 with a red arrow on the MACD, and therefore no longer has a three green arrow signal. So as it stands right now, the two last charts remaining with three green arrow status would be the Dow Jones Industrial Average and the Nasdaq Composite. The Dow appears to be the one that is most likely to retain three green arrows the longest. As it stands right now, you can see that the Nasdaq is getting very, very close to putting in its own red arrow on the moving average convergence divergence histogram down there, or the MACD. Moving along now to our longer term view. Let's take a look at our 1040 crossover method. By the way, I should mention as well, since I haven't already, I did mention this yesterday, but for those of you that only watched this video on Wednesday and we're expecting to see David, remember, we will have a change to our schedule going forward. David needed to switch things up as a result of some of the things that he's got going on over there. And so we switched up our Wednesday classes for our premium students, and we also switched the Market Outlook videos from Wednesday to Thursday. So going forward, I will be doing the Market Outlook videos on Tuesdays and Wednesdays. David will be doing them on Mondays, Thursdays and Fridays. So I thought I would mention that here today, just in case some of you were not aware of that. Of course, we did send out an email to our premium members yesterday regarding that, and I've been mentioning it in class all week as well. But as I mentioned before, sometimes you guys don't always get a chance to attend all of our classes, so this will be a nice way for us to announce that to a larger audience. So expect to see David tomorrow with the market outlook video. All right, back on track with the analysis here. This is chart 4C here, and this is our 1040 crossover method. Not a whole lot has changed here. The most important thing that you can take away is that the Russell 2000 does have a bullish crossover, and it has had that for the last couple of weeks. That joins the other three charts that have had bullish crossovers from a 10-week and a 40-week moving average perspective, basically going back to February and March of this year, whereas the Russell 2000 just joined them here a couple of weeks ago. So all systems go from a longer-term perspective here as we push into the end of the year as well. All right, let's go ahead and pop on over here to the internet briefly. Just wanted to say thank you to all of you that did click like for me yesterday on Twitter. In fact, we had exactly 100. I remember that old TV commercial with Jerry Seinfeld, and he got so excited right when he stopped pumping gas, and it ended right on $50 even, or whatever his number was. So I guess this is my moment to get excited right when we landed right on 100. But in all seriousness, I do appreciate that. You guys do a great job for us in supporting this cause. As you guys can imagine, David and I are running a small business, and it's hard for us to get the word out about our business. And so this particular market outlook video is our way to do that. As you can imagine, taking up 2 or 3 hours of our day is not always the easiest thing for us to do for a free product like this market outlook video that you can find on YouTube. So we have to be able to justify the time that goes into these videos. And our hope is that you guys will support us through liking it on Twitter and Facebook and other areas, and that will get the word out about our premium services, where we actually do make money, right? We don't make any money on these videos here, but we do make money by selling our premium education. And so if you guys can scratch our back in terms of always liking these videos on Twitter, we'll continue to do our best to scratch your back and provide excellent commentary on a daily basis here for free on YouTube. So keep up the great work there. Really appreciate that. Also, real quick, wanted to mention this aspect yesterday. Kind of addressed it a little bit in the intro, but just wanted to reiterate it right here. Remember yesterday's video, I was discussing this concept right here. Many of the risk-off asset classes have experienced oversold cluster signals in recent sessions, including preferred stocks, long-term government bonds, foreign bonds, REITs, and gold. So as we pop back on over here, and by the way, we should have my class tomorrow, my question and answer class for premium students at 11 a.m. Eastern time, and then David will be teaching his portfolio management class at 2 p.m. tomorrow for those of you that want to check that out. But back on over here now to the Thinkorswim platform, let's just pull up a chart of, I don't know, 3A, and address what I just mentioned a moment ago with those cluster signals, right? Preferred stocks. Look at that nice bounce out of preferred stocks today. I mentioned them specifically yesterday as being due for a bounce because we just received that cluster signal the day before. TLT also had a cluster signal. You can see that little green dot down here. It's kind of it's being covered up by this low label right here, but it is behind there. And so TLT, long-term government bonds, had a nice bounce back rally here today as a result of that oversold cluster signal. BNDX also had a oversold cluster signal here recently, had a nice bounce back day here today. That's foreign bonds. GLD had a snapback rally here today as well, and we just had that oversold cluster signal there a couple of days ago. And then the sector-specific areas from a stock perspective, XLU was up very nicely today, up 1.48% after back-to-back oversold cluster signals. XLP did not have a cluster signal but got awfully close here a while back. Had a nice day. They're kind of lumped in there with the defensive areas. And then XLRE, which did have a cluster signal right here. This is the real estate area. Nice 1% move out of real estate there. VNQ, I'm sure, was up as well. VNQ got our cluster here yesterday and was up 0.92% today. So point of me bringing that up is, remember, sometimes when things get overdone, either on the downside or the upside, a reversion type of a move can come into play, and you can make some decent money doing that. Now, obviously, nothing's 100%, but that is the point of David and I putting those overbought and oversold cluster signals in that daily email that we send you guys that are notifying you of this particular video. So again, if you're not signed up for our email distribution list, make sure you do that by going over to the description area on YouTube, and there'll be a link for our email distribution list there. But every day when we send out the notification of this video, we also include what stocks are giving us overbought and oversold cluster signals. Yesterday, from an oversold cluster signal perspective, we had stocks like Pepsi, which, as you can see, had that little green dot yesterday, bounced back very nicely today. In fact, got a nice little hold pattern there, close above the high of the low day. Actually went over to a bullish near-term posture today as a result as well. Coca-Cola was another stock we highlighted in the email yesterday. It had back-to-back oversold cluster signals. It also had a hold signal right here and changed to a bullish near-term posture. We also had CMS from the utility space that was on the list yesterday. You can see a nice snapback rally for CMS, up 1.5% today after back-to-back oversold clusters. We had Duke Energy that also had back-to-back cluster signals, and boom, up over 1% here today. ESS, now over to the real estate space, had an oversold cluster signal yesterday and was up over 1% here today. And then PSA was another one of those real estate plays that had an oversold cluster signal and was up over 1% today as well. So, again, I want to reiterate that's not always going to work out exactly as we had planned, but at least it's one more place where you can try to go to find some interesting trade ideas for those of you that kind of feel brave enough to go counter trend every so often. Now, as it stands, one thing I did want to point out on chart 5A now, and this is our asset class 12 grid, notice that foreign stocks from an emerging market perspective did change today. Remember yesterday when I was doing the video, this was a green background chart. Today it is light pink, and the reason for that is, as you can see up here, the intermediate line was above 80 yesterday. It fell below 80 today, so anytime it falls below 80, it's now out of that upper reversal zone, and if it's trending lower, which it is right now because that label says falling, then that means that we do have more of a bearish posture on it. Now, that's a weekly bearish posture, so definitely take note that there is a difference in the color right here versus, let's say, the preferred stocks right here that are getting that dead cat bounce here today but remain below that falling moving average. This is a strongly bearish posture. This is only a weekly bearish posture, which is just kind of testing the waters as it stands right now. Today was another one of those falling yield types of days. You can see that interest rates fell down to 1.87% on the 10-year Treasury yield. And in turn, remember that oftentimes means that things like preferred stocks and REITs and bonds, like over here, tend to do well, right? They're inversely correlated to one another. When interest rates go down, like they did here today, then those other areas tend to go up, and obviously the opposite is also true. So anyway, we'll see where this takes us, but as I mentioned yesterday with TNX, it looks like it's kind of rounding a corner to me, and it continues to look that way. Obviously today, if it fell another 2%, it's still rounding that corner. It's going to come down here and probably start looking to establish some support somewhere between where it's at right now and where that rising 30-day moving average is. Let's take a look at another set of 12 grids. In this case, let's go over here to the U.S. sectors 12 grid, chart 5C, for those of you that are premium members of Market Scholars following along at home. And the big storyline here today, from my perspective, is what I've kind of already mentioned, which is the snapback rallies in some of those areas that had really gotten beaten up here recently, in particular the interest rate sensitive areas in the lower right-hand corner. We talked about this a little bit here today in my my swing trading class that focuses on factor investing as well. But a lot of those areas that were once hot earlier in the year, and you can kind of use utilities as your example right here, where they were just kind of off to the races in September, really cooled off in a big way at the end of October and into mid-November, where we find ourselves here today. But sometimes things can get a bit overdone, and that's where we found ourselves with those cluster signals here yesterday and the day before. So a really solid snapback rally there for the utilities today. So what does that mean going forward? Well, we take it day by day as we always do, which is why we like to do these videos every day. But the assumption right now from my perspective is that this will not revert back into a new uptrend. My expectation right now is that we get a snapback rally, which, again, that's kind of what I was thinking yesterday as well, since things had gotten oversold here. But just because I think we're going to get a snapback rally here does not mean that we're going to renew our uptrend to the upside. Now, could it happen? Of course, but we all got to set our expectations or assumptions based off of what we're seeing, and then use those expectations and assumptions in our next best trade setups. And so for me, I'm not going to get overly giddy about buying a bunch of utilities for the long term here. I might be willing to do them in the short term for a quick little snapback rally, but my expectation right now is that utilities will fail once they approach this downward trending 30-day moving average right here. Staples look a little bit better. Right, you have your utilities and your real estate that are very interest rate sensitive. You have a smattering of interest rate sensitivity in the staples, but they're not full-fledged interest rate sensitive the way that utilities and REITs are oftentimes viewed. So I'm actually kind of impressed with staples. That's a nice little bounce off of that moving average today. Now, of course, we got to be careful there too, because we're just right back up into this heavy congestion zone that we experienced at the end of September, and then again here kind of at the end of October. So that could very well end up being resistance here. But for my own expectations, I wouldn't be surprised at all if staples have what it takes to continue to motor a little bit higher. Now, if we do have a bullish market into the end of the year, which is my expectation, I would expect other areas other than staples to do better, but it doesn't mean that staples have to do poorly. So just keep that in the back of your mind. There can be opportunities out there if you're willing to look for them. I mentioned Coca-Cola and Pepsi here overnight regarding those oversold cluster signals. Those are two dividend aristocrat companies that oftentimes are viewed as kind of safer types of stocks for those of you that aren't willing to go and grab the next Netflix or Facebook or what have you. In terms of some of the more cyclical areas, you can see that technology ended up having a very good day. I did see here, just as I was about ready to record this, that Cisco did report their earnings after hours and their stock was down a little bit. And so that might pressure XLK tomorrow. But as of right now, that's a pretty strong trajectory that XLK is on. Again, a lot of that is because of Microsoft and Apple, as they are the two big fish that control XLK on a market cap weighted basis. Nonetheless, interesting to note. All right, let's go ahead and take a look at a couple of other charts here before we get into our trade application. Let's come on down here and look at the market segments. We don't look at this one quite as much. This will be chart 5.0 for those of you that are premium members. Here you can see that this is a clean sweep for the bulls. Now you will notice that we have a slightly lighter shade of green with this chart kind of on the bottom rung here. This is the low volatility market segment. And this is the one that we have been finding over in my factor-based swing trading class has been a laggard here more recently as well. Earlier in 2019, when interest rates were falling fairly consistently, we found that low volatility stocks were actually market beaters. They were big-time outperformers. But as interest rates have stopped going down so consistently, they have kind of taken a back seat to some of the more cyclical areas that are out there. And so right now, up here at the top, you'll see growth. So this is ticker symbol SPYG is actually starting to inch its way higher to multi-month highs there as well. So, that kind of is the sign of the times right here as we're in the bullish time period of the year from a seasonality perspective. Market participants are willing to take on risk right now. So they are willing to push into growth stocks that oftentimes have high valuations but kind of promise a rosier future outlook. And they're kind of trying to push away from low volatility stocks as a result. So money is flowing from some of those more boring areas like utilities and REITs, and they're flowing into maybe some of those higher tech types of stocks that are out there as well. Let's do another set of 12 grids that we don't always get a chance to review. And let's take a look here now at chart 5K, and this will be our commodities 12 grid. Now here you can see it's a much more mixed bag. We have a lot more green and pink charts here, because remember, these are not stocks themselves. A lot of what I've been kind of covering in the presentation thus far has been stock related. This is commodity related. These are not the stocks that produce the commodities. These are the commodities themselves. Remember, in this day and age, we're fortunate as retail traders to be able to access ETFs that actually track the price of commodities fairly closely. And so this gives us an opportunity to see kind of what's been going on out there. And I've kind of tried to structure this in a way where we've got more of the energy-related commodities at the top rung, the metals-related commodities in the middle rung, and then the agricultural or soft commodities on that bottom rung there. And so as we kind of look at it from that perspective, you can see that we have 3 green charts on the bottom, and it tells us that some of those agricultural areas are starting to firm up a little bit. Sugar had a very nice pop here today. It was up 1.77%, has that dark shade of green there telling us we've got a strongly bullish posture. Cocoa has been off to the races this week. We don't talk about that a lot, but wow, look at that move out of cocoa. It was up another 2% today. This thing was just touching its 30-day moving average 4 sessions ago, and all of a sudden it has launched higher right there, and it has a strongly bullish intermediate posture. And then we also have coffee that is off to the races to the upside there. It was up nearly 2% today and has a strongly bullish posture as well. The outlier there is corn. You can see corn over here towards the left does remain below that falling moving average and does have a strongly bearish posture. So kind of interesting to see a little bit of divergence there between the agricultural commodities, but more bullishness than bearishness is the takeaway there. In the middle, we see that the metals have really been struggling. Now remember, the metals are kind of they're a diverse group, let's put it that way. Gold is oftentimes viewed as kind of a safety hedge or, kind of a money play, if you will. Whereas you look at things like copper, that's over here to the right-hand side, as more of an industrial metal that gives us some indication as far as what's happening with the economy and whether, it's firing on all cylinders or not. And so what I would say about this group of metals here is that if you want the market to remain strong, it's more positive if copper can be doing better than gold. And right now, I would say that is the case. In fact, you can see gold has a downward trending 30-day moving average. We also have a dark pink background telling us that we have a strongly bearish posture. Over here on copper, we have a rising moving average, and we have a light pink background telling us that we only have a weekly bearish posture. So that's actually a positive sign. It's telling us that the economy is reasonably strong. People aren't necessarily interested in seeking out a safety trade like gold. They're more willing to consider something like copper that does play into the strong economy that we find ourselves in right here. And then on the top rung, you can see it's a bit more of a mixed bag there. UNG, which is natural gas, is struggling a bit more. Had a little bit of a double top here kind of more recently. But we do find some strength in oil itself with USO right here with a strongly bullish intermediate posture. And then also gasoline. This is ticker symbol UGA. And we had a very nice day out of gasoline. It does have an upward trending 30-day moving average. Price is above that rising moving average. And of course, we have that deep shade of green there telling us that we have a strongly bullish posture. In fact, this will be a good segue into our trade application today because I was so impressed with that gasoline chart there that I thought, let's go ahead and place a paper trade on that. So I'm going to come on over here to chart 3A. And we're just going to type in ticker symbol UGA. And this is the United States Gasoline Fund. And it does say LP in the name, so be aware of that. Remember, if you are trading stuff like this in real money, this is just a paper money account, so I don't have to worry about the tax man, but oftentimes if you are trading something like this in a real money account, you might be issued a K1. That does complicate your taxes a bit more, so obviously I'm not your tax advisor. You're going to have to seek out that wisdom somewhere else, but I do want to at least point that out for those of you that might not have been aware of that ahead of time. But as we look at this chart, a couple things caught my eye with it. First of all, I did like the consistency of the upward trend that we've been seeing here over the last 3 months or so. I also like the fact that it's outperforming the S&P 500 as of today. You can see that was a really nice candle that it produced here today. It was up 1.6%, but it did appear to close at the highs of the day. So that was impressive to me. I like the fact that we have that green moving average tip telling us that this particular security is above a rising moving average. And then I also like that we had a bit of a bullish near-term divergence pattern that was shaping up on the bottom side of the market forecast here. So to look for that, what you're looking for is a couple of valleys. So it's kind of the opposite concept of what I mentioned yesterday in this video regarding the S&P 500, where we were looking at the peaks. Here we're looking at the valleys. So we're going to look at valley number 1 on the near-term line right here, kind of this V shape where it was in that lower reversal zone. And then valley number 2 is right here that I'm kind of circling with my mouse, where it kind of dipped briefly and then popped back higher again. So those are our last 2, major near-term lows. And we clearly could make the case that we have higher lows from a near-term perspective. Now let's look at what candles those are associated with. This candle up here is associated with valley number 1, and this candle right here is associated with valley number 2. So in other words, price went down, near-term line went up. That's our divergence that I'm referring to right there, and sometimes can give us a little bit of additional information beyond just what price is telling us, and letting us know that, hey, there are some technical indicators that are telling us that this chart is a little bit more bullish than those that are just simply reading the price activity out of the Wall Street Journal or what have you. So, those are some of the reasons that I thought this looked somewhat interesting here today. So what we'll do is we'll keep it nice and basic. This is a very low liquidity type of a situation here, so be aware of that. Some of you will have volume rules in terms of what you're willing to trade and what you're willing to not trade. So I will forewarn you, this one does not have a lot of volume, so you might simply need to pass on this here today if you have a volume rule, but I don't. Volume is important, particularly for those of you that are trading options, and what I thought we would do here today is just simply buying these shares in the open market outright. And you can see that we closed here at $31.27 today. And I thought we would put our stop loss on this swing trade a little bit below kind of this candle over here. You can see we had a nice hammer candle back here on Halloween where it just was above that rising 30-day moving average during that time period. So as long as we remain above that candle, I will feel fairly bullish about this chart's prospects. And so where I think I'll put my stop loss is at $29.99, just 1 penny below a major round number like $30 per share. So if we got our calculator out and we took the current closing price of $31.27, and we subtract out $29.99 where we would put our stop loss, that means we're taking per share risk of $1.28. If we were to then take that $1.28 and add it back to the closing price here today of $31.27, that tells us that we can put our price target at $32.55. Now you'll notice that gives us a very interesting kind of eyeball level of what to shoot for, because on this candle back over here on September 16th, the high price on that candle was $32.59. So what we're basically saying right here is that since this time it's kind of had some weeks and months to digest that big gap up gain, and now it's back onto an uptrend here, we're hoping that this chart, which has established its kind of dominance above that rising moving average, continues to rise going forward. And as long as it can get back to those highs back in September, we should be able to take a nice swing trading win on that. Again, making the assumption it is not going to go back down below where we were trading back here on Halloween. So in order to implement that type of a trade, I'm going to come over here to the chart. I'm going to right click on it. I'm going to go over here to buy custom with OCO bracket. I'm going to come down here and just make sure that my quantity is what I want it to be. In this case, I'm just going to leave it at the default 100. Obviously, you're going to want to, position size for whatever's best for your personal situation. But this is just education with the paper money account, so I'm just going to do the default shares here. And I will put this in at the closing price because this is a low volatility name. I do want to get filled at 31.27, which is where it closed here today. And so I am going to put that in as a limit order. I will just leave it as a day. So if it gets filled tomorrow, great. If it doesn't, then the whole trade will be canceled and I'll have to move on and look for something else. And that's fine in my book because there's always another train leaving the station. On that line directly below it, I do want to change that in the pink from day to good till cancel. And then that is associated with our upside price target, which I mentioned before was 32.55. I also want to change this down below from day to good till cancel as well. That's associated with our stop loss, which we're going to put at $29.99. Go ahead and click confirm and send. Everything looks fine there, so we'll ship it off and see if we can get filled first thing in the morning. All right, well, thank you for joining me here yet again. Remember, David should be back with you here tomorrow, but today we learned that stocks didn't really advance all that much with the exception of the Dow Jones, which did print a new all-time high. We'll see where this takes us, but we did see a little bit of a dead cat bounce out of some of those oversold kind of risk-off types of areas like utilities and REITs today. So we'll watch that in the days to come as well. And then we're also going to take a peek here at gasoline and see if that can rise into the holiday season. So if you got value out of tonight's video, please go over to Twitter and click like for us and share this with your other social media platforms as well. Thank you very much, and we'll look forward to seeing you next time around. Take care, everybody.